You've heard it a million times, right? The stock market is just a giant casino. You roll the dice, some people get lucky, but most people just lose their shirts. But is that actually true? Today, we're going to tear that idea apart and get down to the hard math of it all. So let's just tackle this head on. On the surface, I get it. The comparison kind of makes sense. In both places, you're putting your money on the line, hoping for a bigger payout. And yeah, there's for sure an element of chance. But that's pretty much where the similarities screech to a halt. And the differences? Well, the differences are everything.
So here's how we're going to break it down. First, we'll put the casino and the market side by side. Then we'll look at the actual math that guarantees a casino always wins. We'll look at the economic engine that drives the market and talk about the huge role that time plays. Then, and this is a big one, we'll uncover how you can accidentally create your own house edge. And finally, it all comes down to a choice. Are you a player or are you an owner?
Okay, let's kick things off with that direct comparison. What really, truly separates putting a chip on black from buying a share of a company?
Yeah, okay, sure. They both involve risk. There's a chance you could lose money, and there's the potential for a big min. Fine. But those are just the surface-level vibes. The real differences are hardwired into their DNA. We're talking about the underlying math, whether wealth is actually being created or just being moved around, and the game-changing impact of time. Let's start with the math.
To really get why the market is different, you first have to understand how a casino works. And their entire multi-billion-dollar business model is built on one simple, brutally effective concept. It's called the house edge. And listen, this has nothing to do with luck. It is a cold, hard, mathematical guarantee that over the long haul, for every dollar that gets bet, the casino is going to keep a slice. It means that, by design, you, the player, have a negative expected return. Let's make this super real for a second. Take an American roulette wheel. You see those two green spots? The 0 and the 00? They aren't just for decoration. They are the entire reason the house has a permanent 5.26% edge. That means the casino isn't just hoping it'll make money. It is a mathematical certainty that over time, it's going to keep about $5.26 for every $100 that gets bet at that table.
And this edge, it's baked into every single game. Now, a really good blackjack player using perfect strategy might get it down under 1%. But look at the other end of that table, Keno, a staggering house edge of up to 25%. The game is rigged from the start. You are mathematically destined to lose.
So the casino is a machine designed to take your money. It's a game with a headwind. Now let's completely switch gears and look at the market. It's powered by a totally different engine. It's not designed to drain money from people. Over the long run, it's designed to grow. It has a natural tailwind pushing it forward.
And here it is, the core difference in a nutshell. A casino is a negative-sum game. The total pile of money at the end is smaller than what everyone started with because the house took its cut. Wealth is just transferred from the players to the house. The stock market, however, is a positive-sum system. It's a mechanism for creating new wealth, not just shuffling existing money around.
So how does it create this new wealth? Well, through actual real-world economic activity. Companies make stuff, they sell stuff, they generate profits, they innovate with new technology. They take their profits and reinvest them to grow even bigger. Just think about it. A company invents a new life-saving drug. That creates new jobs, it creates new profits, and it creates a product that makes the world a better place. That is brand new value. And as a shareholder, you own a tiny piece of that value creation engine.
And the results of that engine, they're undeniable. Just look at the historical data for the S&P 500. Over the last 100 years, and think about everything that happened in that century. Depressions, world wars, tech bubbles, crashes, it has still delivered an average return of over 10% a year. That's not a lucky streak. That's the output of a positive-sum economic machine.
Okay, this brings us to what might be the single biggest factor that separates these two worlds: time. How does time change the game in a casino versus in the market?
In a casino, time is your absolute worst enemy. The longer you sit at that table, the more hands you play, the more spins of the wheel, the more certain it is that the house edge is going to grind you down to zero. It's inevitable. But in the market, time is your greatest ally. It's the magic ingredient that lets that engine of economic growth really do its work for you.
And the data on this, it's just incredible. On any single day, the market is basically a coin flip, up about 53% of the time. But just watch what happens when you stretch out your timeline. Hold for 1 year, and your odds of being in the green jump to 75%. Hold for 5 years, it's almost 90%. And here it is, the knockout punch. Historically, there has never, not once, been a 20-year period where holding a diversified basket of U.S. stocks has lost money.
You can literally see it right here. The day-to-day chaos, all that up and down noise, it just smooths out over time into a clear, powerful upward trend. The longer you stay in the game, the more the underlying economic growth just steamrolls the short-term randomness. This is the exact opposite of a casino, where time just makes your loss more and more certain.
So the market has a tailwind and time is your best friend. Sounds great, right? But, and this is a really big but, what if you could mess all that up? See, here's the twist. While the market itself isn't a casino, you can absolutely choose to treat it like one. And the moment you do that, you introduce your own self-inflicted house edge.
This hidden edge, it comes from little things called frictions. I'm talking about high management fees on funds, the costs of trading all the time, and paying higher taxes on short-term profits. Each one of these is like the casino's rake, constantly taking a little piece of your money off the table.
Now, a 1% fee, that sounds tiny, right? It's nothing compared to roulette. But here's the killer. It compounds year after year after year, and the effect is just devastating. Let this sink in for a second. If you start with $250,000, that tiny 1% fee can cost you over $176,000 over 20 years. That's a house or a college education just gone, vanished into fees.
Here's another way to look at it. Over a sixth of your potential nest egg can just get eaten up by that one little fee. By paying these costs and trading all the time, you are actively turning the market's positive sum game into your own personal negative sum game. You're building a casino where you are guaranteed to lose.
So all of this really boils down to a fundamental choice. It's not about what the market is. It's about how you decide to show up. And when you try to act like a player, when you're constantly jumping in and out, trying to guess the next move, the odds get stacked against you so fast. It's just like being in a casino. And don't take my word for it. A massive study of day traders found that a staggering 97% of them ended up losing money. The research is clear. For almost everyone, that style of trading is hazardous to your wealth. So this brings us right back to the central choice. Are you going to be the player or the owner? The player is obsessed with short-term price wiggles, tries to outsmart everyone, and gets bled dry by that hidden house edge of fees and costs. But the owner focuses on the long-term value of the businesses, hitches a ride on that powerful economic engine, and actually benefits from the market being a positive-sum system.
In the end, the market is not a casino, but you can choose to make it one for yourself. You don't have to play the short-term guessing game. You can choose to own a piece of the entire system. So the choice is yours. Which one are you going to be?